Dear students, we will do module 64. This is section 54 EC, exemption for capital gain. So what is section 54 EC? This is an important section, capital gain not to be charged on investment in certain securities. So we will, if the capital gain, they are investing in certain securities issued after 2018. National Highways Authority of India, Rural Electrification Corporation, Power Corporation. So these three in securities they can invest within 6 months. So these are the conditions. So it's very important. Many SSCs will use this, make use of this investment, because investing in stock market, good returns are there. So this exemption can be for an individual, firm, company, or any other person. Long-term capital asset is transferred by the SSC during the previous year. So any capital asset and the SSC got a long-term capital asset is transferred by the SSC. Now investments in specified securities should be made within 6 months from the date of transfer. That is very important. When you get the problem, you have to see that within 6 months it is possible whether he has invested. Otherwise, he is not eligible for exemption. So the date is very important. Date of transfer and date of investment in securities. The SSC should invest the entire or any part of capital gain. So he can invest the entire amount or some amount. The balance will be taxable. Now amount of exemption. Whatever the capital gain generated and the amount invested in specified securities. So that balance, if any, will be taxable. Securities must be issued on or after 1/4/2018. The maximum investment is restricted to rupees 50 lakhs per financial year. Then consequences of withdrawal. Certain things you have to remember. If it is transferred or converted into money before the expiry of the period of security, the amount of exemption continued to claim under section 54 EC. So the same treatment, whatever the exemption he has claimed earlier plus this new capital gain, that both will be taxed in the year of transfer. Similarly, these are securities. So some people may take loan pledging the securities. Then also it will be considered as it is converted into cash. Now one problem we will do. Mr. A purchased a plot of land in 2002 and 3 for rupees 4 lakhs, and it was sold on 15/4/24 for rupees 14 lakhs 80,000. So 14 lakhs 80,000 is the sale price. 14 lakhs 80,000. 14 lakhs 80,000. And he has paid 20,000 as brokerage. So expenses on sale is 20,000. So the net sale consideration is 14 lakhs 60,000. Now he invested 50,000 in securities issued by National Highways Authority of India on 31/7/24. He sold it in April. Within 3 months he has invested, so we can allow this. And Rural Electrification Corporation on 1/8/24. That is also in August. So then within the time limit, within 6 months he has invested. Both notified under section 54 EC. Compute the taxable capital gain if CIA for 2002-3 is 105 and 24-25 is 363. Now index cost we have to calculate. Index cost is 4 lakhs into, this is the price at which he has acquired in 2002-3. The index is 105. 105. So the value is 13 lakhs 82,000, 13 lakhs 82,857. 857. Now definitely it is long term capital gain 2002 to 2024, 77,143. Now less he has invested in National Highways Authority of India. The value is 50,000 and Rural Electrification Corporation, he has invested 25,000. So 75,000 he will get exemption under section 54 EC. Now the taxable long-term capital gain. Taxable long-term capital gain is 2,143. Now the last step I have to compare between section 54D and 54 EC. 54D and 54 EC, the similarity is any type of SSCs can claim. Second one is asset sold. 54D long term or short term. 54 EC it's only long term capital asset. New asset. 54D they have to reinvest or they have to construct a new industrial undertaking or they have to shift. 54 EC meaning they have to invest in securities. National Highways Authority of India, Rural Electrification Corporation or Power Finance Corporation. 3 securities issued after 1/4/2018. Next is time limit for investment. Under section 54D, SSC will get 3 years to invest, reshift or re-establish that. Whereas 54EC, it's only 6 months. Now exemption, whatever the capital gain he has generated, that will be the taxable thing. But what he has reinvested, and if he has invested in capital gain deposit scheme, that he can claim exemption. 54EC, capital gains or amount invested, whichever is less. He cannot invest in the capital gain deposit scheme. Now lock-in period 54D, it is 3 years. 54EC, it's 5 years. So you have to remember 5 years is the lock-in period. Applicability 54D, you have to remember it's compulsory acquisition. 54EC, any long-term capital asset. It can be any transfer, compulsory or voluntary. Last point is maximum exemption limit. 54D, there is no exemption limit. Whereas 54EC, rupees 50 lakhs per financial year. So this is what I wanted to explain in this module. Happy learning. Thank you.